I'm about to shred this 30-year mortgage contract. And the reason why might just blow your mind, because what the banks are quietly pushing next makes this look generous. I'll show you what it is, and then show you how people are escaping it completely using a strategy that feels like it should be illegal. It's not. And by the end of this video, you'll know exactly how to use it, and I'll even give you a cheat sheet so you can pull it off yourself. All right, let's dive in. The average American can no longer afford a traditional 30-year mortgage. Wages, they've not kept up. Mortgage rates are still elevated, and home prices have doubled in many markets since just 2020. So what are banks doing? Every single thing that they can to make it easier for you to borrow their money, because they only make money when you use theirs. So introducing the 40-year mortgage.
What billionaire didn't do it with good debt? What country that's got a leading GDP that didn't do it with good debt? There's good debt and there's bad debt. Bad debt's financing jewelry, financing your vacation, financing your car rental, financing shoes, right? Even I love cars. I love cars, but financing even automobiles, that's going to depreciate over time. This asset actually might appreciate. So good debt is sign of something that might actually go up in value. And you said it. I was going to say it. You said it already. There was no magic of a 30-year mortgage. It was designed around affordability after the Great Depression. People lived to 60 years of age, 59 to be exact. So a 30-year mortgage is, just under half of that. Now people are living to 80 years plus. A 40-year mortgage. No, look, auto loans used to be 3 to 5 years, Kelly. Now they're what, 4 to 8 years? And people are like, okay, that's normal because of affordability issues. We're taking something that might be an appreciable asset, giving you hopefully a a subsidized rate if you're a first-time home buyer in what I'm proposing, and giving you the civil rights issue of this generation, financial literacy, so you know what you're doing, giving you a shot at over time, even riding out what might be a recession during that 40 years, right? Because over time, real estate always rebounds. If you look at the long arc of history, it's never gone down in the history of America.
He says it lowers payments by 7%. It aligns with longer life expectancy. It gets more renters into ownership, and it boosts the economy by turning people into tax-paying homeowners. And he's not alone. The FHA, VA, Fannie Mae, and Freddie Mac have all updated their loan modification programs to allow 40-year terms, mostly to avoid foreclosure. And new lenders like Carrington Mortgage and Triangle Credit Union are offering 40-year loans to first-time buyers. The goal? Lower payments, expand access. On paper, it sounds reasonable. But wait, the 40-year mortgage is not a scam, but it's not a solution either. It's a debt extension disguised as affordability. You pay less per month, sure, but across 4 decades, you'll pay tens or hundreds of thousands more in total interest. And that lower payment, it helps you qualify for an overpriced home, but it also helps the seller keep the price inflated. So instead of solving the problem, it kind of props it up. And let's be honest, it doesn't build more homes. It doesn't lower land costs. It doesn't fix inventory. It's a Band-Aid. But then for many, it could be a stepping stone. But it does confirm one thing. Even the banks are being forced to get creative in today's housing market. And that should tell you everything. Because when the institutions that built the system start bending the rules to survive, it means the old playbook, it's breaking. So what do? You learn the new one. Because whether you're buying your first home or your first investment property, you can't wait for the market to get easier. You don't have the time. You've got to get smarter. Here, let's walk through some other alternatives, some emerging and overlooked creative financing opportunities in real estate. Not theory, not trend, just real-world tools people are using right now to get deals done without begging a bank. And pinned below in the comments, there's a cheat sheet that banks, they really don't want you to have because they don't like creative financing because it cuts them out. If you use these non-traditional strategies for buying property without relying solely on standard bank loans or large cash down payments, they don't make any money. Now, I don't think any of us are going to be shedding a tear for banks, but in a housing market like this, High rates, high prices, low inventory. Creative finance isn't just clever, it's essential. So who's using these strategies right now? Well, investors certainly are. Investors are scaling up despite the 7 to 8% rates for them. Buyers shut out by traditional loans, and sellers stuck with properties that they can't move. So what's being used? Well, assumable loans. Subject to. This is where you step into someone else's low-rate mortgage. And then wraparound mortgages. This is where the seller wraps the original loan with the new one, and then you just pay them directly. And then there's land trusts. You keep the deal off the radar. You add a privacy shield to it. Then there's the contract for deed. This is seller financing where you control now and then you just get the deed later. And then novation agreements. This is where you partner with sellers. You sell at retail and then you keep the spread. And then assumable marketplaces like Rome and Assume List where you can get sub 4% gold mines there. Then 0% business credit. Use tools like loopholelending.com to fund the gaps, to do the repairs, to market for properties, to make the down payments. These aren't gimmicks. They're practical moves and they're working right now. I learned most of this stuff the hard way, back before the market crashed, and I thought I'd missed the boat. Turns out, I just didn't know where the back door was. But once I got my first subject to deal, it changed everything. That house now cash flows every month, and I never filled out a loan app to get it. My credit score was never checked. Real estate, you see, it's still the final frontier where the average person can build wealth. And if the banks are getting creative, so should you. And let's talk about why most people never do. You see, most people just don't know how, or are even aware that they can. I mean, where are you going to learn how? Not in real estate agent school. Brokers, they don't want the liability. Banks aren't going to teach it because they'd make less money if they did. Subject to deals, wraparound loans, seller financing, that all bypasses the bank. You don't need a loan officer. You don't need a massive down payment. Sometimes you don't need one at all. And most of the time, you don't even need credit. Even some investors just ignore it because it sounds complicated. And hey, it is a little weird until you learn the rules. But once you do, you can make offers that nobody else can. You can get into deals that most people think are impossible. And you can build wealth on terms that actually work for you, not the bank. So yeah, they don't teach it, but we do. So reach out if you want some help. Either way though, here's what you need to pull it all together. First thing, you have to learn the structures, like subject to, wraps, novation, seller finance. These are tools that you can learn in a weekend, but use for a lifetime. 2, you got to find the right sellers, equity rich or distressed, off market, untapped. 3, you got to pair it with flexible capital. Tools like loopholelending.com help fill the gaps. 4, you got to stack your wins. Use one deal to fund the next. Build cash flow and then exit the rat race. And you don't need 40 years of bank payments to own property. You need 40 minutes of strategy and the courage to act. You know, if this opened your eyes a little bit and you want help putting it all into play, click the link below and download the free creative real estate financing cheat sheets. It breaks down the structures, the scripts, and seller motivations behind the deals we just walked through, so you can take your next step with confidence. I mean, you can sit on the sidelines and watch the market change again, or you can pivot, get creative, and finally take control. The door is wide open right now. Let's go. Hey, quick thing before you go. I'm running this weird experiment where I basically pay people to do real estate deals for them. And then I split the profits with them 50-50. And you can watch this right here to get all the details. And yeah, I know it's probably the most ridiculous offer that I've ever made, but it's working like crazy. And if you're thinking there's a catch, you would be right. I can only work with 2 to 3 people per city. So if you're curious, check out this video here to see if your market's still open. Or don't. It's not for everyone. Thanks for watching though. I'll see you next time. Take care.